Hey, thanks for tuning in. In this video, we're going to discuss this little flash crash that we just experienced and whether or not it's over. I think temporarily it's stopped, but there's no doubt that the character of this market has changed. Just one thing I want to point out here, right? We'll just look at the SPY weekly chart. Going back to this last little ABC correction, from here, you put in a high, a low, a high, a low, a high, a low, a high, low, 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 high, lower low. Okay, we've changed the pattern. The pattern that exists no longer exists. Now, here are some of the corrective patterns that you can see. Okay, which one's it going to be? Is it going to be a little flat, something like this? Or is it going to be a zigzag, which is a lot more harmful? And if it's a zigzag, look for 441 to be about it. And guess where she's opening this morning? Yep, she's gapping up 1%, right around 441. Okay, so we're still looking for a correction on the weekly charts. That's the thing that we're going to focus on throughout this video. The question is, what type of correction is it going to be? As you can see, we have the PPO divergence, PPO heading back towards the zero line. This was the wave 1 corrective PPO. Pulled back to 2, wave 3 high, and then pull back. Could come all the way to zero line, for all we know. But basic trend following here says, as long as we're above the green SMA 20, and certainly the configuration, the slope of these moving averages is telling me that any dip, depending on how deep. I mean, you could come to 415, 420, 400, this gap here, right? It's hard to tell. Any dip is going to get bought. The question is how steep. We're going to take a look at some other indices here. This looks like a pretty obvious setup to me, right? Been riding the green line the whole time. Well, we're coming back into the green line and we're testing the previous breakout area. This happens all the time. To me, this looks like an ascending triangle, right? Boom, here's your triangle. And when this thing completes, I would expect price to come up to about 310. But you did just get rejected on the weekly PPO cross, which is very bearish. And this gap on every single chart we look at, is a big problem, right? So if they can get back up and fill that gap today, then you have possibly just a common gap. It's come all the time. If they can't fill that gap today, well, it's a very obvious change in character and likely a breakaway gap, the start of a new trend, right? And that's why I started out by looking at the weekly charts and saying, hey, look, SPY has broken that higher low pattern. Has SMH? No, SMH is not. Have the Qs broken that weekly higher low pattern? 359? Not yet. They held it, right? So this low, this high, this higher low, higher high, right? This pattern continues. Nothing has changed in the Qs. And this, simple moving average 20 is certainly an area of interest to look to add this week. But again, these gaps are very scary. People don't recognize that this type of gap and go and then closing towards the low on the week below the moving averages is what opens up this decline. It's only Tuesday, okay? And that was a waterfall decline yesterday, akin to what we saw in March. It was exactly the same, 3% down every single day for 3 weeks straight. So I'm not saying that's coming here. What I'm saying is the intensity of selling was exactly the same. And if you look at what's happening with all these sectors, you're seeing this gap and go on volume. You're seeing PPO roll over on every single time frame, starting at the weekly, right? Another PPO divergence. This is certainly the environment where you could get a dramatic drop. And given how price is quite elevated and how momentum is in the bears' favor with this divergence particularly, you could see this continue lower. Now let's take a look at IWM, the last one here. I mean, this couldn't be more obvious a sell signal. I don't know what else to tell you. Now, that gap was filled, or about as close to filled as you're going to get. What do we have here? 219.07. The high on the day is 219. So basically filled it, and then pre-market today is gapping above. The real gap is up here at 22.48. So if this is putting in a series of higher lows and higher highs, there's nothing wrong with this chart. But if you start at the top, you have a low, high, low, high, lower low, higher high, lower low. It's almost like we were expanding there. And we put in a higher low relative to this, and then this series of ABCs up. Now the problem I have with this chart is that gap. It's the same gap on every single chart. This gap with this volume in this structure, this weekly PPO bearish structure, is what leads to the weekly consolidation. Now, if you look at the monthly trends on all of these, the quarterly trends, the annual trends, they're all up. Every one of them is up. So it leads to the probability of the dip being bought being greater than it not. That being said, the PPO and the monthly is rolling over. I mean, it's obvious that this was the top. Look at that doji. 1, 2, 3, 4, 5, 6 inside months on declining volume and declining momentum as SMA 10 came up to price. This is the first tag of SMA 10 after printing a new all-time high. That generally leads to another all-time high. Again, is this distribution after a large markup appreciation period? Distribute, decline, come back down, test the previous area, confirm it as demand. I don't know. We'll have to see. But I see the weekly PPO as very bearish, increasing bear momentum now, and a loss of the 40 as a good night Irene or sayonara, or whatever you want to use to say this is over. This trade is dead. Now, I want to preface that with this is a gap fill. This is a weekly reversal candlestick, but it's only Tuesday morning. Yes, IWM filled the gap almost instantly. But what you don't have here, yeah, this gap's getting filled this morning. Price is at 220.20, right? So they're going to come up and fill that gap. But the point I'm trying to bring up here is that this divergence is going to fail. This is moving up very quickly, the 200, okay? And at this point, we're below it. We've tested it third time. If she doesn't go from here, she's not going. There's nowhere to go. And what you're going to ultimately get is a massive move in either direction. And from the downside, just to give you both, we'd look at something like this. And it doesn't happen in a straight line. It certainly would look, I think, akin to the symmetrical move like this. That looks like a 5-wave move to me. Give me another 5-wave move down. Break this low. There's your symmetrical move, because this is how I'm seeing this. There's no doubt about it. 5-wave move up, ABC, a 5-wave move down, ABC up, another 5-wave move down. That's just how I see it. Now it's possible this is already completed. 1, 2, 3, 4, 5, right? I'm certainly not lost on me that we have a series of higher lows here on the weekly that I pointed out. But this is the chart that everyone needs to be watching. And if these things break down further, if the breakdowns continue like on the daily, or is this actually not a breakdown? Did the dip get bought and now they're going back into the channel, right? And set one more all-time high. I don't know. But I can tell you right now, this is a reversal sign on volume at the bottom of the channel, at the moving average 100. We started this correction 12 sessions ago, and we're certainly looking for, at minimum, something like this. At minimum, before another decline, like the one we just experienced. But again, I just want to point out that we're still in the channel here. We're still above all the moving averages. And yes, fear is pretty high. Okay. We'll end on the VIX. So here's the VIX. My lines have not loaded yet. I know that's one right there. I mean, that's about as close as you're going to get to another high. We do have this breakout underway, something like that. So we've kind of hit all the targets for the upside of this breakout. 30 is basically it. It went up to 28.79 and fell lower. So what this is telling me, and the weekly is pretty scary too, right? What this is telling me is that the weekly chart is certainly bullish at the moment, but it is long-term in a downtrend. And if you zoom out to the monthly, you see the same thing, right? PPO is certainly heading lower, is now below the zero line and curling up. Long way to go to be a breakout again. But this daily chart is pretty much everything you need to know. We had this breakout of PPO that was coiling for a really long time. They broke out. When you have a breakout of a triangle pattern, this is kind of how you get some targets. So we kind of hit the first target at least, and now we're pulling back. It would not surprise me if she fell all the way down to $22 and then rallied from there, and you go look at the price pre-market, and she's at $23. So they're going to come back down and test the $20 level, and whether or not it's demand is going to tell us a lot about the market either way. But yeah, moving forward, you have to be very, very defensive and look at things just like a perfect example of like the best stock that we're currently trading right now. Like, this isn't an obvious uptrend. The moving averages confirm that. And even this stock here took some hits the last 3 weeks, but has maintained the appreciation in price from this day here. The close this day was 161.42. Close yesterday was 161.69. So, you could look at this as a bull wedge, bull flag pattern, really, a big cup. But you could also say, well, momentum is rolling over even in the strongest stocks that we've been watching. And that's not a good sign. That's something you have to take note of. I mean, all the strongest stocks that I've been watching, even DHR, right? These things are now pulling back. They're at risk of giving up the 40. The PPO is accelerating to the downside. So yeah, still a bear flag structure, could bring price all the way down to the 300s. So yeah, I don't want to confuse anyone. I'm just trying to give people a schematic here to look forward to tomorrow, Wednesday, the 22nd. It's going to be a pivotal day for the markets. It's possible they gap and go all day today, fill all the gaps left open from yesterday, and then as a result of the Fed go up or down. That's it. Another schematic is they're gapping up this morning to sell. They're going as close to the gap fills as they can get, as supply and demand will allow. When they get to the gap fills, they will sell off. And then print a higher low. That's one scenario. Sell off and print a new low. That's another scenario. And when I look at the structure of this, people want to call this an ending diagonal, and that's fine. And maybe this was an ending diagonal up here. Fair enough. But I can also just look at this as an ascending channel. And as long as we're in this channel, we're good. You break down from here. This is your target. All right, 415 at minimum. If not, the bottom of the channel, 400, and these gaps. So anyone who wants to tell you they know what's going to happen next, they don't. Okay, we can sit here and follow the trend. The trend is up. We can't sit here and say, you know what, I'm going to try to just short this. I'm going to try to short that. 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 That's not following the trend. That's counter trend trading. The trend follower zooms out to the monthly chart and says, this is an uptrend. Everything here is the moving averages, the momentum, the volume, everything is confirming an uptrend. The weekly chart, we just lost our series of higher lows and higher highs. But I want to point out, when this happened, you lost all of your higher lows and higher highs as well. And that's what led to the new bull market. So sometimes they have to destroy the game or destroy the pattern before they can create a new one. And this one, to me, looks over. Question is, what type of correction are we getting from the top? Like I keep saying, some people are calling this an ending diagonal because it's overlapping in structure. I'm not sure why it couldn't be an ascending triangle for some type of wave 4. I don't really know. It could be anything. All I know is we got a high here. We're pulling back. And the pullback started yesterday in a very epic fashion with insane amount of volume. And almost breaking down out of this ascending channel. But as you can see, she did not. So while yesterday was certainly the largest drawdown in my account all year in any one day, today it will likely be the largest increase in my account at any given one day. That's just how, well, maybe not, but that's just how these markets have been. It's been very, very choppy. And for those that try to be super aggressive, you're tending to get chopped out of every position. What I am looking to do is stay long until there's no reason to be long anymore. And for me, that's SPY below 400. That's IWM below 208, 207, 210, whatever you want to call it. She could come down here. But again, it's not the same. She already came down here once. So coming down here again, in my opinion, would have to be a look below and fail, something like what NVIDIA did back here. But again, when she did this back here, this was the first visit. This was the low, first visit. Okay? We don't have that on IWM. IWM has visited this low, this area, 1, 2, 3, 4 times. So getting back below the 210, 208 area, I seen a lot of Elliott wave counts saying, yeah, it would be bullish to go down there. I don't think you're really seeing the structure properly. I mean, these trends will be rolling over if price gets down there. And these buyers will be trapped. They'll capitulate if price gets down here. No one's going to hold. Buyers aren't just going to magically appear when price falls below everything. right? Buyers aren't going to magically appear on the third tag of a level. That diminishes the significance of buyers and sellers. So I look at this very differently than some of the Elliott Wave technicians. I look at this as, you come down to 208, 209, particularly 209, 205, 209.05. If you come down to that level, you can spike through it intraday, but you better not close 10-minute candle below that level, because if you do, it's over. They're not going to come down there for a day and then magically just cap and go. That's not how supply and demand works, unless there was some massive fundamental change in what was running our economy. Like the Fed changed interest rates, something with bonds. Like the president died. Something crazy would have to happen, either positive or negative, to affect this change. Because right now this is in balance. And when you're in balance, the assumption and the high probability bet is you're not going to leave balance. So when you get to the bottom of balance, selling doesn't make a lot of sense. When you get to the middle, buying and selling doesn't make any sense. And when you get to the top, buying doesn't make any sense, right? All you can really do with this setup is either avoid, buy towards the bottom, or sell towards the top. That's about it. And the final option is wait until you get a break above 230s or a break below 208s, and then press the bet. A break below 208s, we short. Above 230, you market buy. And until then, there's literally no change in structure, and yet emotionally, everyone is done with this trade. So that should tell you something about the psychology. I still see this as a big contracting triangle, something like A, B, C, D, E. We'll just have to see how this plays out. Anyways, that's all I have. I hope you do well today and stay protected. Gap ups are for selling, gap downs are for buying. Don't get that confused, and you'll tend to do well. If you like the content, hit the like button, subscribe, and we'll see you in the next video.